Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates, uh, whether it might come from the economic calendar or headline news or geopolitical items. Sometimes it could be a combination, but sometimes it even gets more confusing out there in the markets when the market sentiment changes, whereas good news is now bad news and vice versa. And that can really put a wrench into a lot of people or consumers' thoughts of what's going on out there. We try to give an explanation of what investors are going through and where the thought and behind the market reactions and trying to get that information out to you. So a little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. Love to be able to have earn the opportunity from you folks. If you guys are looking to refinance or if you're looking to get pre-approved and buy your next property, we'd love to earn that opportunity from you. But other than that, we like to be a resource for you guys. So if you guys got questions about anything, we'd love to be able to answer for you. So please feel free to reach out. We are here to try to help you guys out. Uh, so without further ado, we'll just jump right into it. We'll start off with the economic calendar. The big report today is retail sales for the month of April. March number was revised much higher, as you can see here. It went from 0.5% to 1.4%. So that's a pretty big number here. And then forecast was supposed to grow by 0.9%, and it came in at forecast on this. Now, market reaction is going really well with this. Stocks are doing well with the retail sales. But one Rick Santelli on CNBC watched earlier today or saw earlier today made a really good point about it. They do not consider inflationary numbers. These are not adjusted for inflationary data. So these are based on total dollar amount in billions of dollars of sales each month. So with the higher prices, it doesn't mean that necessarily uh, increasing. It's just that people are paying more, and could be. And I think if you look at year over year, it was up like 6.7% from last year. So as we know, inflation's spiked quite a bit, and it's just the investors are getting pretty excited about this, thinking that this is a number uh, that people are jumping out there. But in any case, I think I might have to agree with Rick Santelli that these are just haven't been adjusted for inflation, and maybe a lot of investors may not be realizing that as well. Um, we'll touch on that in a minute here when we go over headline news. There is something I want to mention about that, but let's continue with this. We got industrial production for the month of April. So the month of March, it rose 0.9%. Forecast called for 0.5% and exceed that 1.1%. So industrial production did pretty well for the month of April. However, if you look at NAHB Home Builder Index, this is the confidence level for home builders, and went from 77 in the month of April. Forecast was supposed to be a slight dip to 75, and it dropped dramatically down to 69. This is something we definitely have to watch because if it gets too low, the confidence level gets too low for home builders, well, they're going to stop building. This doesn't make sense to build homes if they don't feel comfortable with it. They don't want to get stuck with that inventory. So their confidence level has dropped dramatically in May, and that's something that, of course, we're going to need to continue to monitor. Last but not least, a very minor report. It's business inventories for the month of March. So February was revised slightly higher at 1.5% to 1.8%. Forecast called for 1.9%, and it just exceeded that by at 2% here. Now to touch back on the retail sales, we do got some retail lenders or retailers giving their earnings reports this week, and Walmart disappointed a bit, and obviously they're one of the big ones out there, and so that's something we'll have to kind of keep our eyes on. Again, out there. So retail sales, that data came up. It was a pretty big jump, a pretty good sized jump. However, it's not adjusted for inflation, and we saw people like Walmart not have a very good earnings report as well. So we'll wait and see this week what other retailers come out with. But again, keep that in mind with that. China announced that they are, with a slowing market, that they're feeling maybe gave them a vote of confidence for technology. There's some of not social media, but their high technology platforms, giving them a little more vote of, sounds like maybe a little more vote of confidence. They kind of clamped down on them last year, and it sounds like maybe that could be a little bit better. So as a result, you got people like J.P. Morgan kind of came in and started giving some of those a vote of confidence in terms of investment dollars for those companies. Um, so we'll have to kind of wait and see what transpires with that. So that could be a difference maker in the sense that that will attract investment dollars in here. Later today, we do got Jerome Powell will be speaking around 11 o'clock Pacific Standard Time. I think it's 2 o'clock. Then we'll have a few other Fed members speak. So that could really change the markets depending on what they say, especially after some of the data we've seen being released. But here's the mortgage-backed securities. We're down quite a bit today, as you can see. We're down 45 basis points. So that, of course, we got turned down again by the 25-day moving average after closing pretty much right on it yesterday. As you can see here, we're pretty much right at the 25-day moving average and just got pushed back today. So we're down about 45, 44 basis points currently. And as you can see here, that's pretty much after the release of the retail sales and just kind of dropped a bit. And then we had a little bit of a slight spike upwards, but came back downwards on there. But again, things could dramatically change depending on what is said by the Fed and its members later today, this afternoon here. Stocks are up as a result. They do like that retail sales data on there, and let's also take a look at the Treasury. Treasury did spike upwards, it broke back above its 25-day moving average after being below it. So we're sitting at just at 2.96, still under the 3% threshold right now. Lastly, let's touch on what the average conforming loan mortgage rate would be, and these do have points built into it, and they usually are delayed by about a day. So 15 years at 4.78 according to this, and the 30 years at 5.37. So they have come down a little bit from what we saw due to last week's surge. We had a pretty good week last week, as you saw here. This week it's been kind of mixed. So yesterday was good, but however today is down. So we'll kind of wait and see what the rest of the day after the Fed speak transpires, if that might have much impact with mortgage-backed security or not. All right, folks. Hopefully that will answer any questions for you guys. Moving forward, if you guys got any questions, please feel free to reach out. We're here to help you guys out. If you guys like these videos, please help us out. Smash that like button and share. We greatly appreciate you folks. You guys have a great rest of the day, and we'll look forward to see you guys in tomorrow's video. Bye-bye.